Good morning. It is November 5th. It's Wednesday, hump day, and we are coming off a pretty strong sell-off in these high-flying AI stocks. And boy, NVIDIA and the gang have been doing really well for a long time. So one day of sell-offs is not a big deal, but we'll see how long this thing lasts. Is this sell-off going to last a long time? We're going to talk about that in this live stream, kind of give you our observation and let you know what we're thinking is happening. I'm looking forward to seeing Daryl, my colleague, hit the charts on what he's seen overall and what he thinks his sell-off's going to look like. How you doing this morning, Daryl?
Doing wonderful, Victor. It's good to be here. Hello, everyone.
It is great to be with you. And I was on another live stream thinking, man, there's a couple stocks that I would have liked for you to take a look at, but here we are. There's a couple stocks that I'd like you to look at today for sure. We're going to look at some earnings. We've got NVO that announced their earnings earlier this morning, McDonald's and Toyota Motor. And those are three companies we're going to look at and take a look at the fundamentals, look at what they announced, and look at the charts. We're also going to talk about other stories. So one of the things that's happening is the S&P and the NASDAQ really are coming off all-time highs, and the stock market has been just performing great. Who's going to complain about the rate of appreciation on the S&P? I don't think many people are going to complain. 15% year to date. Over the 5-year, it's just done terrific. Doubling your money over 5 years if you just bought the S&P index. Now, looking at where the market is trading with the PE ratios and so forth, I think it's expensive. I don't think that's a controversial statement. It's just an expensive market. And if we can have a pullback to reduce stock prices, that wouldn't be a bad idea, especially around some of these sectors that have just gotten so darn big, like semiconductors. Semiconductors gotten really, really big. And I'm a believer that this space is cyclical. They're having a boom of, that is the biggest boom I've seen in my lifetime. But at some point, it's going to slow down. And evidence of that is our friends at Meta. Meta is the biggest value, or I should say the stock that I have the most value invested in my portfolio. So I am front row seat on their earnings. I listened to their earnings live. I studied their earnings report. And the reality is that Meta is spending a lot of money on semiconductors and data center related expenses to build up their AI arsenal. But they don't have anything to show for it. It's not like, hey, we've been spending gobs of capital for 2 years, going on 3, and we have nothing to show for it. Well, investors did not like that. They're like, you spent all that money and you don't have anything? Like, you don't have an inkling of a new business, an inkling of evidence that, hey, this thing is creating organic new revenue. It's all like soft benefits. Oh, it's making us better. We could place ads a little bit better. We can do this a little bit better. And investors didn't buy it. Neither did the analyst. I thought the analyst did a really good job on the call. Every question put Meta on the defensive around, why are you spending so much capital? Why are you spending more? And then how much capital are you going to spend next year? And then the answer landed really, really horribly. We're going to spend more. So the market sold off Meta harshly the day after they announced, because they announced after the market closed. And then for the remainder of the week, the stock traded lower. It's traded lower yesterday. So back to semiconductor. That is rational. Meta being treated like that. Again, I'm a big Meta stockholder, so I'm not like beating up on Meta, and I'm not beating up on NVIDIA either. But it's rational to see businesses get punished when they're spending a lot of capital without showing return on invested capital. That's one of the key metrics that investors, owners of businesses, are looking for. They're looking for, if I give you, management team, if I give you these resources and capital, go do the best you can to get me a rate of return, because I'm an owner of this business. I want to expand my wealth. I want to have a great rate of return. and it's not happening at Meta. So I believe that Meta got the message: slow your CapEx down, or show evidence that you have a new business. Okay. But I don't think that's going to happen, because they've had coming up on 3 years to show evidence that their new business is making money, creating revenue. And the answer is no, they're drawing a blank. And what Meta's seen, I observe that other businesses are experiencing the same outcome, which is they're not seeing a big giant benefit out of AI. There was a study coming out of MIT that said that 95% of companies investing in AI are not seeing return on investment. Well, for how long will companies just spend money on a pet project that really isn't generating clear return on investment? Not long, because markets will get really grumpy and start selling off stocks and really pushing back on that type of behavior. So we'll see how these things sort out, but I think it's rational to see this sell-off. For the last couple months, you've heard me say that we are in an expensive market, and we'll see. We'll see if this semiconductor space can be lessened to a more rational valuation. And we'll see if these, CapEx spend cycles are going to slow down to be more rational. The other thing that's happening is businesses are running out of cash, so they're taking on debt, which is going to make it riskier. Meta issued out $30 billion of debt. Other companies are issuing out debt in order to build out these data centers. Companies like CoreWeave. It's risky. It's risky. If the music stops and companies say, I don't want to spend on AI right now because we're not quite sure we're going to get return on investment, and these data centers spent all this money making their data centers super fast and capable, but they don't have any customers, but they have debt. Oh, not a good place to be. So that thing's playing out. And Michael Burry, the Big Short main character of the movie, Christian Bale played his character. He shorted NVIDIA and Palantir. And so we'll see how this plays out. This is what we're seeing live in front of our eyes, but we're investors. How can we make money? How can we grow our wealth? Well, one of the themes that I'm interested in is, okay, so this part of the market is kind of been really drummed up, technology and so forth. Maybe we can look at stocks in healthcare, maybe some discretionary that hasn't been bid up. Like lower interest rates are going to help Home Depot, most definitely. Walmart, Costco. Okay, it's the nice staple stocks. I don't know if energy is going to bounce back, but heck, at this point, not a bad idea. So just kind of looking away from where this has had our attention for the last 3 years, as it should have, because that's where the money was made. But we'll see what happens going forward. All right. And the last thing, we talked about this prior to going live. Now, this sell-off is just one day. Just one day. What's happening with the futures? Looks like we're in the green. Now, one thing that could keep us in the red is the government shutdown. The government shutdown, I don't think we were paying attention to it a whole lot. And frankly, it didn't kind of matter. But I think it will matter in a couple weeks' time, because certain parts of the federal government are running out of money. And I heard a story that there may be a need to limit the airspace, reduce the airspace for travel, because they're running out of money with the air traffic controller department. And man, that would not be well received by the public. I think that would be a big problem right ahead of Thanksgiving. So if the government shutdown gets fixed this week, maybe next week, we're good. If the government shutdown goes another 2-3 weeks, Curious to see what's going to happen, but I don't think it's going to be a good thing. Any thoughts, Daryl, on the market, its valuation? I'm going to give you the screen so you can kind of give us some comments on what you think.
I know the last couple of days, it started for me about the middle of last week because I own more defensive type companies compared to tech. I do own some tech, but the defensive is more of a weight in my portfolio. So I started feeling it last week. One of the interesting charts that I ran across was we had a situation on the 28th of October where the S&P actually closed higher, but the number of components that declined in the S&P 500 was actually 58% were declining in price, but the S&P went up. It's like the first time that had happened since the middle 90s, 1990s. And I think it's only happened one other time in history. So this was somewhat of a rare event that happened last October. But I was really scratching my head that day, watching the S&P go up, and my portfolio was really getting hit pretty hard. So let's go back to the S&P chart that I was showing. This is the one I like to keep a watch on. So we had a pullback on October the 10th. We all remember that. That was a 2.71% drawdown.
Yep,
and
on a Friday.
We blew right through the 20-day moving average and almost tested the 50-day. And we got right back up to the 20-day just a few days later. We had another 20-day test on the 1st of August where we came down and actually closed below the 20-day. For this pullback yesterday, we didn't even get down to the 20-day. So to me, that is somewhat good news. I'm also watching the COE put call equity ratio. That's this graph just below the price chart. And this takes the raw data, the put call ratio, where more puts are being bought. So protection is being bought compared to buying calls. So when it spikes like this, almost every time you're pretty close to a bottom. So this peak here, it took us 2 extra days to get to the bottom, but we were pretty close to it when those peak, when they get above about 75 or so. Here we peaked up. We actually ran up for a few days, but then had the little bit of a sell off and traded sideways for a while. Here we actually started falling, and then they peaked. We were at the bottom by that point, and we started back on a rise. So anyway, I'm watching this. We're currently on the raw data. We're sitting at 0.66. So we're not quite to 75 yet. Typically you're starting to see a bottom. And then this darker blue line is just the 5-day average, because this put call ratio can be a little noisy. So once it starts getting above 55, that's really something to watch there. So I'm watching this. This only updates once per day. So at the end of the day, we'll get a new update. I'll take a look and see if it's increasing or starting to decrease. But people are getting pretty complacent here. The put call ratio is very low. Anytime it gets low, you're just about ready to start finding another when it gets really low, you're starting to look for somewhat of a pullback because people are becoming complacent.
Mm-hmm.
So anyway, that's a interesting one that I watch, and there's about 10 other charts that I watch pretty frequently that I'm not going to go through here today, but it's basically how many components are above their 200-day, 50-day, and 20-day. That's somewhat interesting to watch. I do that for every sector. None of those really stand out except for staples. A lot of those are trading currently below their 200-day moving average, many of them. So anyway, how far are we going to pull back? I think we're already starting to get pretty high on the put call ratio, so I'm not much expecting anything past the 50-day unless we get a big announcement that we're not expecting.
Mm-hmm.
If it just follows the pattern of the chart, I don't expect anything really below the 50 because we are entering the most seasonal, powerful 3 months of the year for the stock market.
And that's due to like buybacks and other forces.
Yep, buybacks. We have the bill that was passed earlier. The impacts from that will start coming through. The withholding of tax withholding is a little bit bigger than what most people were thinking. So tax time should see more money in people's hands. So there's a lot of things that are coming in the next few months that I think are positive catalysts for the market.
Right. Okay. And I mean, the market is pretty much flat as we head toward the open, which is going to happen in about 13 minutes. So we'll see, like you said, we'll see how, if the market's going to sell off. And we'll also see, what I'd be curious to see, are we going to rotate away from technology into some of these other stocks? We'll see. It's kind of just a bunch of educated, calculated guesses. So interesting stuff. Thank you, Daryl. So we are going to see what happens with the market. But what definitely happened this morning is we had earnings. We had earnings from Toyota, Novo Nordisk, McDonald's, some three big companies. And I wanted to cover these three companies, kind of get started. And then if everybody out there, we've got 28 people on the stream. Thank you for joining us this morning. If there's a stock you'd like to look at and you're a member, pop it in the chat. If you're not a member, no big deal. $5 super chat. We can take a look at your stock and we can analyze it from a fundamental perspective, and then we'll look at the charts. So starting with, we'll start with the biggest company, Toyota. Toyota, most definitely, in my mind, is a really high quality company, manufacturing cars. The car business is not the best business that I can invest in, but Toyota has been a decent performer with a 50% rate of appreciation over the last 5 years. Over the 1 year, it's not bad, 18%, and you get paid a 2.65% dividend. This is a pretty good size cap, 258. Now, the biggest market cap is Tesla, revenue of $335 billion. Let's take a look at what they announced and what that looked like. So these are numbers that are in the Japanese yen. The business grew by 3.5% in this is the previous quarter, so I don't have the latest numbers there. They have been growing quarter after quarter, and this is a big business. And Toyota probably is the best run business of them all. And I know one thing affecting car businesses is on September 30th was the last day that the federal EV tax credits were granted out, and there was a big push in that quarter, which would be calendar wise the third quarter. So there was good volumes reported by automakers, but the first month after that, the volumes really declined for EVs. So I think that's going to be a headwind for these car companies as they compare their sales numbers to the previous year. Toyota is trading lower by 1.57, and the stock for the last month, it's been pretty decent. Year to date, not so decent. It's well behind the S&P. I don't have a lot of comments on Toyota. No analysts cover it. I own a Toyota, so it's a good vehicle. I've always, like, my family, we've owned Toyotas. You know, my brothers, sisters, we've always appreciated how high quality their product has always been. It's expected they're going to continue to grow, but let's not confuse with a company that creates a really good product and a good stock, right? Let's say candles, right? Candles are something that I don't really buy, but let's say you have a company that's making the best candles in the world. The world's never seen these candles like they've manufactured by this one company. But the reality is that's probably a really bad investment. So I'm not going to confuse the two. Car businesses, in my mind, are not the best investments. Too much capital has to go into their factories. They have to buy so many materials and product. They get very little margin out of their product. And I'd rather invest in other industries. See, the gross margin is 20%. So they have to operate very efficiently. There's no room for error. And that's just not the business I want to own. What do you think about Toyota, Daryl, on the chart?
Yeah, I'm looking at 5 years here, and I put a couple of resistance lines where I can connect a few highs and a few lows just to see where the range is. And it tends to trade over the last 5 years between about 130 and 208 or so. We did have one run up at the beginning of 2024 where they got up to 255 or so. So they do trade in a range. We look at just 1 year of data. They are testing that upper range right now. They went up and tested it and are actually pulling back now. But the 20-day is upward sloping, the 50-day is upward sloping, and the 200-day is upward sloping. The 5-day moving average has rolled over and is now coming down. The last 3 trading days have been below that 5-day moving average. The RSI is 54, so it is showing some relative strength. The PPO is positive. It looks like here in the next couple of days, if they keep trading sideways or down, that we're going to have a bearish crossover in bullish territory. The accumulation still looks really well, and the money flow is still positive at the moment. So I think we can expect them to just, continue trading in this range.
Excellent. Very good. So yeah, the car business, I'm not sure it's going to have a terrific 2026. Cars, the good news is they last so darn long. It's good for the consumer, but I think bad for the manufacturer. All right, moving along. Let's go over to Novo Nordisk. This is a big pharmaceutical company, best known for their weight loss drugs. And this stock, look at the 5-year. It looks like it's a mountain drawn by a first grader, right? Nice, beautiful mountain. It went up, it rallied higher, and then it's just really sold off. And during that time, the company has really grown nicely. If you look at the quarterly, they've been growing, although growth is really slowed down. I think there's a reason for the stock to be selling off today. 5% growth. Just looking at the trend, they are becoming a slow growth company. That's not good. It's not good at all. This is going to be a value stock. They pay a dividend, but the growth rate is really concerning in my mind. They have terrific margins, very high margins. They make money, but they just don't have momentum. They are losing momentum. There's a lot of players that are coming into the market trying to compete in that weight loss category. They have compounders that are competing in the category. So they have competition coming out of the woodwork. Traditionally, pharmaceutical companies can fend off competition because they have patents on the particular formula that they have that created that pharmaceutical that's helping people. But in this case here, there's just competition coming out of the woodwork. And the biggest competitor being Eli Lilly, who's grown really well. There's 5 analysts covering the stock, and they do think there's a huge discount because this business does make a lot of money, but that sales growth is a concern. They're going to become a slow grower for a couple of years and then eventually start to grow. Maybe they're going to launch some drugs here. Their PE ratio is really low and staying low. I don't know when this thing's going to rally. I don't know when NVO is going to rally, but geez, it could be a value trap. And it could be a stock where capital just kind of sits there. It's been a stock that I've owned. I thought it was going to pick up at some point, and it hasn't. It's kind of just been a dog stock. So I think I'm going to be selling my NBO stock, just getting out of it. It's most definitely discounted. It's discounted in a big way, but the market's just not buying the stock. And I just don't want my capital to sit around doing nothing. So I am thinking I'm going to be selling my NBO stock. What do you think, Daryl?
So we've looked at this one several times over the last few months. I can tell where I drew the downtrend lines that we probably last looked at it about a month or so ago. But we'll start off and give some idea of how I got to these lines. So I'm going to look at 5 years worth of data. And I have this first auto resistance line, and it is connecting a resistance point in 2021, 2022, and 20 again in 2022. Then we had the big run up and the big slide down. But basically, we're getting about where I think the price should be. We were looking at fast graphs a little bit earlier, Victor and I, and you can see that fast graphs calculates their fair value to be this gold line. The market multiple, that is what the market applies to Novo, is this blue line. And you can see how far extended it got above its fair value and normal market multiple. So we are trading below fair value at this time, and that looks to be right around this price where it has found support many times. So now let's go into just a 1 year view, and we'll look at these downtrend lines, and I'm going to make some adjustments to them because it has been a month or so since we've looked at this stock. But this top trend line I have connected to this peak and to this peak. And all I'm going to do is extend it out, keeping those lines connected. You can see that the 200-day has now got to about that downtrend level. Then I want to take this line and just extend it out. I have it connected to this peak and the same peak that we had the prior downtrend line connected to. So I'm just going to extend this out. And you can see that these two lines are getting ready to touch here, probably within the next couple of months or so. So let me save this. And we can see that we did trend above this lower trend line. We did get above it. We came below it. We got above it. And now we're trading below it again. And I think we're headed closer to this green line that's basically got 5 years of data supporting it. So That's what I think of Novo. I have never bought into this company. The RSI is extremely negative, oversold. PPO is negative. The accumulation is not quite a 52-week low, but it's not much above it either. And it looks like it spent most of this past year people selling.
Thanks, Daryl.
Okay.
Yeah, good analysis. Thank you.
All of the moving averages are declining as well.
All right, so let's take a look at the market opened. Oh man, this is early, but the Nasdaq is down 2%. That seems a little too high. There we go. So things are flat. Now, small caps, one thing that is just not it's not fair, right? Is small caps, whenever there's fear introduced in the market, these small caps sell off so fast. It's pretty incredible. And small caps over the last 3 years have underperformed the big caps. That's just reality. You can find some really good small cap stocks. They're excellent, great valuations. They're really going places, but their stocks don't trade with the momentum that these big caps trade with. Looks like once you have a stock that's been proven in the market, it really just takes off. A lot of investors move into a stock that is a proven, well-known name, and small caps don't have that luxury. So we're dealing with, a market that has a little bit of fear in it, and the small caps are taking the brunt of the sell-off. When we look at the heat map, it's it's moving fast, and we've got some green on the screen. Some semiconductors recovering some of its loss from yesterday. Tesla's recovering some of its loss. And some of the semiconductor space is rallying higher. For some reason, med device, health plans, diagnostics, these are kind of selling off. I'm not sure what this is. Medical distribution. Okay, that's doing pretty well. UNH is down under pressure. All right. So let's see later in the stream where we're at with this heat map. For now, let's talk cheeseburgers. Let's talk about McDonald's. They announced their earnings this morning, and this is a real safe stock. A lot of investors like McDonald's because in a recession, you can really get an affordable meal at McDonald's, and it's a favorite to parents, right? Because kids tend to like McDonald's. And this stock here for the year to date is up 6%, the 1 year 4%, and then the 5 year up 42%. It pays a dividend. It's always been a dividend payer. $213 billion market cap. And the thing about McDonald's, I have not been an investor in McDonald's. It's not my cup of tea. It is a very well-recognized name. People can get their heads around their business because we all know what McDonald's is all about. The growth rate for the quarter was 3%. That's a decent growth rate because they do have a big revenue number. They've had a couple of quarters where the growth hasn't been positive. And overall, this is a slow grower. This is a known commodity. We know what their business is all about. One of the things that I don't like about McDonald's, historically, they've had a lot of debt, and that debt is not good. I don't think anybody's going to argue with me. And they have a pretty good amount of debt, $55.89 billion. And if we look at debt to EBITDA, 4. This is a well-known, well-operated business, and they carry a lot of debt. It's like, well, why is that? Is it because they're landowners and they lease out the land over to all these franchisees? Maybe, but it's just a lot of debt for them to carry. So when I look at this market cap, it is a market cap of 219. When I value the company, I have to decrement that $55 billion of debt. And I've never gotten McDonald's to price at a discount because of that debt. The forecast, we've got 23 analysts covering the stock, and we have price targets that are as high as 375, as low as 260. They think it's discounted by 8.69. This is a good investment for somebody who maybe is a little older, just wants something that's going to be consistent. It's not going to move a whole lot. If we have a recession, it's probably going to rally. But it's not going to be for somebody who wants a high growth stock. Like you want to get on a stock that's going to have a 10 to 20% rate of appreciation, rate of return every year for the next 10 years on average. That's not going to be McDonald's in my book. It's going to be another stock that has maybe a product, a service that is newer. It has an addressable market that is underpenetrated by the marketplace, by the competitors in that marketplace. It's an innovative product that is disrupting and getting better margins and better cash flows. It's not a McDonald's. They are going to grow consistently over time. And again, if you want a consistent stock, McDonald's is a stock you can think about. But I don't commit to stocks that are just going to do okay. And I don't like the balance sheet. So McDonald's is not a buy for me for those reasons. What do you think of McDonald's, Daryl?
If we go back 20 years, this has been a lower left to upper right kind of a chart. Those are always good to see. I haven't drawn any with a trend channel, but this one might be one to go in that category. We can see that for probably, I don't know, the last 2 years, they've just been trading in somewhat of a range sideways. So let's go to 1 year, and you can look at the price even today. That's where it was trading in February. Trades above that and trades below that. They're trading above their rising 20-day moving average, which is below the 50-day moving average. The 200-day is also rising. The RSI is 55 at the moment. The PPO is actually negative. Looks like if prices can continue to the upside, that we would have a crossover. I don't know if it's going to make it back into positive territory or not. And accumulation is at a 52-week peak, and the money flow has been positive since about the 10th of October. Looks like it spent most of the year with positive money flow.
Okay.
That's it for me.
All right. Perfect. So we've gotten to the point in the stream where we're going to start taking some requests. We've got 4 stocks lined up. First one's going to be a quick one. Somebody mentioned that Beta is a new IPO company. It IPO'd. Did it IPO today? Yeah, first day on the New York Stock Exchange. Here we go. And this is a company that does electric aircraft. And they have a pretty neat aircraft, I believe. So now we're going electric on airplanes, which is going to be an interesting era. It's amazing to think that you can get an electric aircraft, because batteries tend to be heavy. I just got an EV in September, and EVs are heavy. And of course, weight is kind of a liability when you are building an aircraft. So it's amazing to know that, hey, these guys are making it happen, because look at these airplanes fly. They might even be quieter, by the way. I don't know, maybe engine noise, or I know turbines can make a fair bit of noise. Maybe these electric powered airplanes are going to be quieter. And they're announcing, aerospace and defense is not one of my favorite industry sectors to invest in. They've IPO'd at $8 billion. They have revenues of $23 million. So you are paying up for the stock. You're paying 30, 35 times sales for the company, which is pretty darn high. And they are growing that number, which is good. They're probably losing a lot of money. I don't touch IPOs. I let them kind of run for a year or more. I get more earnings out of them and then eventually make a decision, because even some really good quality businesses tend to sell off quite a bit. And this one here is interesting to see. It's great to see the innovation happen in aerospace. It's quite amazing. And I think about the aerospace, right? We have more drones flying. We've got aircraft are becoming, I guess, less expensive, more accessible. And I'm just a guy, right? I'm not a pilot or anything, but I worry about the airspace congestion. It's like, geez, are we going to have collisions and stuff? I hope not. So hopefully it all happens in a safe way. Any comments on beta?
I don't have any at the moment.
All right, perfect. Do you happen to be a pilot?
No.
All right. Okay, we'll move on. We'll move on to MET. I believe that's MetLife. That is Snoopy's company. The character Snoopy, that's their mascot. Who doesn't like Snoopy? You got to like Snoopy. Year to date, this is a life insurance company. They do life insurance, benefits, annuities, asset management worldwide. Now, it is an older company, but let's take a look at their performance and then their fundamentals. So for the year to date, it's down 3%. They pay a 3% dividend, and the 1 year up 1%, 5 year looking pretty good over the 5 year. And I think it was because you have a really good compare in 2020, and then they really rose nicely. It's a $53 billion market cap company with revenues of $73 billion. PE ratio of 13.45. Forward P is really low at 8. Okay. And let's see if these guys are growing. So did they announce this morning? They may have, because they're in New York. They have a big building in Manhattan. But I don't see any earnings there. Let me see if the news is covering it. So I'm assuming that they did not announce. Let's see, Matt, after the close. Okay, so they'll announce later today, and we don't have their financials just yet. Let's take a look at their financials for previous quarters, and they are not consistently growing. They have some pretty good growth here or there. They also have a contraction in Q4 of 2024, and they had a contraction in the quarter they closed for June 30th. So it's not a business that's consistently just, growing like a Robinhood or a company like that. All right. So forecast. 11 analysts cover them, and those analysts believe that overall this stock is discounted. Everyone has a higher price target. They're going to continue to grow, although it's single digit. They are a pretty big company, and their earnings per share is going to expand faster, much faster than their revenue growth. That looks really good. Now, as we look at lower interest rates, I think it's going to help MetLife because they're writing life insurance policies. And actually, I'm going to flip on that. Lower interest rates may hurt MetLife. They're writing life insurance policies and insurance products. And what makes an insurance business lucrative is they get to carry that float, that money they get to hold because people pay their policies. The insurance company gets a hold of that cash. They invest it. They make money on it while they're waiting to pay on claims. Well, if we have lower interest rates, that's going to be a little bit of a headwind for MetLife, in my opinion. So it's not, I think, a a very prosperous next couple of years because I think interest rates are going to stay low for a couple of years. So that would be one thing to consider for me. The P ratio does look pretty darn good. It's dropping to a really low number, but it might be because the market just isn't excited about MetLife. There's a lot of other things happening in financial services that are exciting. Like you have these buy now, pay later companies. You have insurance being sold by these new digital only outfits that I think are doing a good job. So this would be a pretty conservative investment for anybody interested in it. I'm not an investor in MetLife. I think it's a solid business, but probably not going to deliver great returns. It's probably just going to be a nice safe stock. Any thoughts on MetLife?
Yeah, it's pretty much been trading sideways for the past year. I'll have to zoom in a little bit here to see the activity. We got a lot of price congestion here. But the RSI is at 51. The PPO is in negative territory or bearish territory, but we did have a bullish crossover. The accumulation distribution peaked back in September, and it's been trailing down. You can verify that by looking at the money flow, which is currently negative. So I'll zoom in to just look at 3 months so we can look at these moving averages. Since it trades sideways, these moving averages and the price tends to be clustered together. They are trading below their 50-day moving average, which is downward sloping. The 20-day is also downward sloping. The 200-day is downward sloping. It was trading below the 200-day for a couple of weeks, but has managed to get above that and get back pretty close to the 50. So I wouldn't expect a lot from the price. I was looking at the price to book, which is something I typically look at for these kinds of companies. And it looked a little bit high to me at this point compared to other insurance companies like this.
Yeah. And I mean, MetLife is, I think it's a discounted stock if you look at their fundamentals because the P ratio is so low and they do drive a lot of cash. I just don't think there's a lot of excitement in this space, and the excitement is being kind of grabbed by other businesses in the insurance space. So that is MetLife. Wanted to comment on MetLife. Let's move on to Rigel. I believe somebody commented, I think it was Paul, that Rigel is having a real good day. Let's take a look at Rigel, which is a small healthcare company, I believe a pharmaceutical. Yeah, 36% higher is a pretty decent day in anybody's book. Boy, this stock really moves, huh? It has a 173% rate of appreciation for the 1 year. Year to date, 129. What is going on, Rigel? They announced yesterday, Rigel biotech company engages in the discovery developing of providing therapies that enhance the lives of patients with hematologic disorders and cancer. Okay, so their drug is likely really doing what it's supposed to do and helping people. The P ratio this year is 6, going to 17. Let's take a look at what they announced. So they grew at 25%. They were on this just terrific growth rate. They're slowing down, but maybe they announced that, hey, they have another drug company and the drug coming that's going to be commercialized, and bam, the stock goes up. So they have been generating cash flow, although it's inconsistent, and margins are terrific, very high margins. This shows me that they probably don't do their own manufacturing. They probably have a contract manufacturer. All right. So it's having a terrific day. And this has been a stock we looked at, and it does carry a nice discount, but it's risky. It's a small cap, really small cap, $691 million in market cap. And it really moves quickly because it's so small. If investors buy into it, it really moves the stock. So congratulations to those that own RIGL. It's having a terrific day. I hope it continues to go higher, and it's probably going to grab more attention from the market, especially if they have really solid fundamentals, which they do, and more investors will want to come into RIGL. Terrific, terrific stock. I know that some investors that are part of the community own this. So congratulations. That's a pretty good day to have, huh? So you enjoy the day. It is a discounted stock. I'll quickly, I'll show the valuation that I have on them after I flip it over to you for the charts.
Okay, so this one is definitely very volatile. I don't know how long it's been in existence. Looks like quite a while, actually. So back in 2001, they were up to $466 a share, but they haven't been anywhere close to that since. They did hit a $245 price at least 4 times over 25 years. But looks like most recently the highs have been around somewhere between 46 and 55. So let's just take a look at 1 year. Once again, this is a volatility on steroids here. They went up 118% in 2 weeks or 3 weeks. So if you can catch one of those, you can do pretty well on this one. The 50-day is down sloping at the moment. The 5 days turned up. They are up today by, looks like 10.65%. I thought you had them even higher than that. The 200-day is upward sloping and the 20-day is upward sloping. The RSI is sitting at 70 right now, so it's re-entering overbought territory. But if you look here, it stayed overbought for 3 weeks. And once it entered overbought, you still had a 83% run. So don't necessarily be afraid to buy when they're overbought, because you can still have some really good price runs on these kind of stocks.
A day like today, it's going to pretty much be the best commercial this stock can get, because it's going to get a lot more eyeballs on it.
Yep, they've already exceeded their 50-day average volume, and it's we're 23 minutes into the market, so it wouldn't surprise me to hit this same kind of volume today, as they did on the 6th of August, which is a day they reported before, if I were guessing. So the PPO just moved into positive territory. Money flow has been negative, and it was even more negative yesterday. It looks like maybe that could turn around a little bit today.
Excellent. Thank you, sir. So again, congratulations to RIGL stockholders. You guys are killing it today. Go out somewhere nice to eat, have a good lunch, and let's take a look at the markets. The market, it shook off yesterday, so we had a little sell-off yesterday. No big deal. Market's back. Isn't this market amazing in 2025?
It is. It's crazy.
It's like a real good boxer. It could take a punch, took a pretty good punch yesterday, and it's back in there. It's back in there trying to score points. And when we look at the heat map, look at that semiconductor space. Wow. It is green. And Google is going back up. Looks like the semiconductor space, the hardware space is looking good. Actually, this is the software technology. Is that? Yeah. And Meta's get on the mend. We've got Tesla going up a little higher. Looks like Eli Lilly is higher. And some of these health pharmaceutical stocks are going up nicely. Okay. Energy stocks are higher. Very good. So we got some green on the screen. A couple of red spots, but the market's higher. All right, so let's keep moving. We got a good list going. We got a lot of people joining. And at Lendelos, great to have you. I'm glad you discovered the channel. I hope to see you on the stream often. We've got the next stock is UNH. UNH was requested. I forgot from who, but let's take a peek. We definitely have covered UNH a lot. It's down 0.95%. And this one here has been a little bit of a mystery as to why it's been selling off for the last month or so. And I think that, the government is shut down because they can't agree on a spending bill to reopen the government. And one of the arguments they're having is funding the Affordable Care Act and providing the subsidies that low-income people would need, or would the government believes that they need to have that because they can't afford to buy into health insurance. So if that passes, I think it's going to help United Healthcare. If it doesn't pass, it's going to hurt United Healthcare and health insurance companies, because just frankly, fewer people are going to participate in the health insurance market if they can't afford it. So that's what's been going on. That's a big factor that's weighing on the stock. But overall, I still think this is a nicely discounted stock, which the dividend has gotten attractive on United Health. This stock has been sold off, beaten up, left out with the garbage. It is an undesirable stock for the market, but it is quite desirable for me because I know that this is a business that's really worth having. It has a big market cap, but it used to be much bigger. It used to be like 600 billion. And they have big revenue. They continue to grow their revenue. They continue to be profitable and generate cash. So there's naysayers out there in the space, but health insurance is something we need. We have to have, right? It's a necessity. We're all here, I should say, speaking for myself, I invest in stocks because I want to grow my wealth. I want to grow my wealth and make my portfolio as valuable as possible. It's a real interesting endeavor that I'm doing. I buy health insurance. I buy life insurance because everything I'm building could be disrupted if, let's say, somebody in my family got an illness that we have to take care of. It costs a lot of money. It costs $1 million or so. Well, if I have a health insurance, I think I'm taking that risk off the table. So health insurance is a necessity. It's a necessity for people to have. And that's one of the reasons why I buy into UNH and I'm an investor. Now, the short-term sell-off has been interesting. It's been surprising to me. And I may buy more shares in UNH. I already own a pretty good number of shares, but it might be a good time to buy into UNH. What do you think, sir, on UNH? What are you seeing on those charts?
Yeah, I just released a video on this one. But we have some trend lines from the last time that we analyzed this one. And it was running into some pretty significant resistance right here. I have this Fibonacci retracement here. So this, when you're coming from a bottom and moving your way back to higher prices, you're typically going to face resistance at these Fibonacci levels.
Mm-hmm. And just to put behavior on that, is it because somebody bought the stock at 280 and is now taking profits, or?
That very well could be when it starts hitting levels up here.
Mm-hmm.
That could very well be the case. But this Fibonacci retracement level here also coincides with the 200-day moving average. So the Fibonacci serves as resistance, the 200-day serves as resistance. This downtrend line serves as resistance. So you have more things working against it at this point than we had working forward for it. We have 6 days of declining prices. And I can tell you what I actually did is I had been buying back here. This is where I started my purchases of UNH, and I actually trimmed 2 days after it fell below that trend line. So I sold about 9% of my holdings, and I'm waiting for it to bottom out a little bit before I pick up some more shares, which unfortunately we've already fallen below that trend line and the prior high from this trend line. So it would not surprise me for us to be down to about 312 to about 298 to 312 would be my guess. It's moved into not quite oversold, but it's getting there. PPO has moved into negative territory, and the money flow is also negative. I have high hopes for this one, but it's definitely in a little bit of a decline now, and I'm looking for around 312.
Yeah, I think United Healthcare in a year, 2 years time will be priced higher, and it may not be a perfect line upward and onwards, but it's been interesting to see the stock sell off under some pressure. We'll see where it goes from here. Looking at the market, we're seeing that we're back to the 2025 playbook, which is big caps are getting a lot of investors, and looks like Google and Meta are having a good day. Amazon's, it's not a terrible day, but it's not a good day. Tesla's okay. Eli Lilly's really rocking. So that's looking good. All right. So, man, Micron is having a great day. It looks like DJ, you called that out. I'll put it on the list so we can look at it. I'll put it down the list. Next stock up is GitLab. Let's talk a little GitLab.
By the way, the services PMI was just released, and the services actually expanded, so that's good news. We were sitting at 50 before, and if we close below 50, then that would be contraction. But we actually are sitting at 52.4, so it was higher than what was expected. So that's good news for the economy.
So the economy is doing okay. We're doing more services. We're mostly a services economy. Very good.
Yep.
Very good. All right. So let's move over to GitLab. And GitLab, incorporated together with its subs, develops software for the software development lifecycle in the United States, Europe, and Asia. The company provides GitLab that covers various stages of the DevSecOps lifecycle developing software. Okay. So these guys here, this is a stock that I think is discounted, and it's really being sold off. I think part of it is that the AI story is that AI may make the need to develop software not go away, but lessen the amount of software cost, effort, and therefore the necessity for a GitLab is going to go away. I guess I should restate that and say the need for GitLab is going to go down. So the addressable market's going to shrink for them. This is a smaller cap, $7.76 billion in market cap with revenues of 857, forward P of 52. The business, when are they going to announce? They announce on December 4th. So we're about a month away from that announcement. And the quarterly that they last reported, man, what do you mean AI is disrupting them? They are growing very nicely. This is really good growth. On top of that, they have really good margins. So this is a good margin business. You look at their margins and gross margins of 88.5. Remember earlier in the stream, I showed Toyota. Toyota is scratching and and gnawing their way to 20%. If they could do 20% gross margins, they'd be super happy. These guys are at 88.5, and they're not making money because they're not at the scale that they need to be. They're already producing cash flow, but this combination with their growth rate, to me, this is a interesting stock. Software stocks have not received a lot of love. They're under this threat that AI is going to change their businesses, maybe even take away market from them. That may be the case, but I don't think it is. And I think it's going to take a long time. If anything, these guys can start using AI in their favor and provide new products and services. The analysts on this stock, 27, even though it's a small cap, 27 analysts cover them. And some analysts are very, very optimistic, saying this is a $76 stock. On average, they think it's discounted by 25.8. I agree with them. I actually have a higher discount than that. They're going to continue to grow. So where's this AI disruption? They're going to, be knocking on the door of $2 billion in revenue sometime soon and probably be acquired by somebody at some point, because that kind of growth is pretty darn good, especially these hyperscalers that, you think of AWS or Google, I think, acquired a company like this. They want their customers to come to their cloud and develop new software applications, brand new custom ones, and run on the infrastructure that those companies provide. AWS, Microsoft Azure, Google Cloud. They would love a business that use GitLab, develop a new software application or solution, and run it on their infrastructure, because of course they charge them for the infrastructure. So all those things I think are good things for GitLab. So this is a discounted stock. Now, when's it going to rally? I don't know, because it hasn't been doing anything because of that thread of the story. But other stocks in this space have kind of felt the same pain. If you look at an Adobe as an example, that's kind of a really good example. This thing is just not doing anything, but this is a very well-known market leader for the creative space, software programs for people that create stuff. And it's down to $139 billion market cap, even though this business is fairly big, growing at almost 11%, very high margins, nearly 90% gross margins, terrific cash flows. The market doesn't care. Market's thinking AI is going to change Adobe for the worst, so we're going to sell it off. What do you think of GitLab, sir? Do you have any charts on GitLab?
Well, I'm looking at it now. It looks like they IPO'd somewhere around, let me save this real quick. So they IPO'd in, looks like October of 2021, spiked up to around 137. And then I've added a couple of resistance lines, and we'll stay at 5 years until you can understand why I put these lines here. So I'm just trying to connect some peaks here. And this lower line looks like it actually connects even more peaks. So I'm seeing 1, 2, 3, 4, 5. Went a little bit above it there, and here's 6. And we're trading right below that at the moment. So yeah, it may be undervalued, but the market is not appreciating it at the moment. So here's that lower line that we looked at. You can see it's been trading below that since March of this year. It's been trading below about 38 to got as high as 54 since March. So the RSI is below 50. That's bearish. The PPO is bullish at the moment, but we're having a bearish crossover. Accumulation is pretty flat for the last year. Money flow is negative. It is trading below an upward sloping 20-day moving average, 50-day moving average. The 200-day is down sloping, as well as the 5-day. moving average. So based on this chart, it looks like it's going to trade sideways for a while unless, some catalyst is received to make it do something different.
All right. Thank you, sir. All right. Next one up is Upstart. Upstart is a buy now, pay later platform. And this is a new category where consumer finance related. But the interesting thing as I research these is they're not necessarily making net interest margin. They actually, I would think it's more like factoring if you're familiar with that. And factoring is when somebody buys somebody else's debt and they just take a percentage off the amount, and it's almost like an immediate margin on that money. And these guys are really growing well, and they have the originations really went much higher. So the amount of volumes of these transactions, I'm not going to call them loans or short-term loans, but they're transaction oriented, and they have total revenue year-over-year growth of 71%. These numbers look fantastic. And I'm trying to figure out why is the market selling this off so badly? Because when we look at what's going on with the market, this thing's selling off 13%. It sold off yesterday. It's been growing nicely. This is the quarterly. And they have very good margins. Again, this is not like a traditional finance company. They're making, consider it this way. It's almost why Visa is worth so much money. Somebody buys a product, it's $1,000 product. Upstart is in the transaction. Upstart will pay the retailer maybe the price of the product minus 3%. And then the consumer will have 6 weeks to pay back Upstart. Well, that's a pretty good rate of return if you are getting 3% in 6 weeks, because you can turn around and do the same thing. 6 weeks is a month and a half. So you could do that about 8 times a year with your capital. Well, 8 times 3 is 24 overall percent rate of appreciation or return on invested capital. That's very good. So that's what they're trying to do. And their volumes are getting bigger and expanding. So I'm not quite sure why the market is selling this one off as badly as it's sold off since they announced their earnings. But most definitely, they are selling off the stock. It's under a lot of pressure, down 20% over the last 5 days. And this might be an opportunity, but I don't know when this thing's going to rally. Year to date, it's not good. Something in the market is making investors think this is a bad place in the market. And I'm not sure it's the economy, because the economy I don't think is terrible right now. I think the economy is fine. It's not going to break any records, but we just saw the services PMI look good. So I'm not quite sure what's going on here, but I know that this company is discounted, and when it starts to rally, it could really, really perform well, because you see when it rallies, it just takes off. On this occasion went from $34 up to $84. So you could have more than doubled your money in a couple of months. And I think when this thing takes off, it's going to do something similar. This was an IPO back in 2020 when IPO stocks were just flying up, and this is an example of it. It went up to $390 a share, and ever since then it's been lower than that. But we're not going to invest using our rear view mirror. We're going to look through the windshield and see that this could be a nice opportunity. If this thing begins to go up, I'd probably be interested in it, but I'd have to wait for it to start to rally higher. What are you seeing on the charts, Darryl, for Upstart?
Yeah, they're not looking good. So I went back 5 years and I put this line here that connects a few points. So that's kind of the natural high for the stock. We are seeing a very large wick on this candle here, which means Buyers tried to push the price higher, but have failed to do so far in this trading session. We'll see what the rest of the day brings, but if it closes with a candle using this pattern, you can expect at least a couple more days of downward prices. We do have a 50-day that is down sloping. The 20-day is also down sloping. The 20-day is back behind here. It looks like it's downward sloping as well. It is moving into oversold territory, but it hasn't been what I would really call bullish as far as RSI since the beginning of August. The PPO is negative, and the divergence between the two moving averages is getting worse today. The accumulation is at a 52-week low. And we did have one spurt of buying here where money was moving into the stock, but we've had at least 3 fairly long duration sell-offs, 4 of them. So my guess is this one's heading a bit lower.
Wow. Okay. And I think it's going to be a good stock to pick up at the right time. I do agree that the space is got a pretty good future. This type of transaction makes sense. And I'm going to watch Upstart closely, maybe even buy some shares at some point. But I think for now, I'm going to watch it. If it starts to rally, boy, I'm going to jump in. But thanks for asking about Upstart, guys. All right, next one. We're going to talk about Mountain. And these guys are, they partner with companies to help them get better at advertising with their target market, their consumers. And it's an IPO company. They just IPO'd, so they're just doing something new. Now, it's not a bad idea because in the whole media space, you have a big change, right? 20 years ago, we had a good part of media was about linear TV, right? The channels that we grew up watching, ABC, NBC, CBS, and Fox and so forth. And then cable, ESPN, and all the different cable channels. Well, that's completely changed. You have YouTube disrupting, Netflix disrupting, and really the landscape has really changed. You have TikTok with short form videos. That's been really disruptive and interesting. And now you have YouTube doing shorts, Facebook, Meta doing shorts. I think they call theirs Reels. So Mountain is kind of helping these advertisers adapt. Now, the thing I don't like about Mountain, nothing against them, is they IPO'd in 2025. I like to let IPO settle down. This one definitely is settling down, right? I can't say that it ran up too high, but boy, it's really settled down from, let's call it $29 a share down to 14. So you'd be dealing with a 50% haircut if you bought at that point. That's why I stay away from IPOs. This is a really good looking business, by the way. I like what I see when I look at the business. They're growing nicely. They can grow a little faster to show that, hey, this is a really good idea. And they are operating with good margins, 71.6. So I think it's a good business. It's just a little too early for me to jump in. I'll wait a little bit. Maybe in 2026, I'll revisit this and consider investing, especially since the market is lowering the price. I'm good with it lowering the price. So this is an IPO stock. I don't know if you have any comments, Daryl.
We can take a look at it. They are trading at all-time lows at the moment. And I can tell by all the price by volume bars that You know, there were a lot of buyers up here. So when it starts trying to make its way back up, you're going to have a lot of selling pressure, in my personal opinion. The accumulation started off good, but we're now at a 5 or 6 month low, and most of the money flow has been out of the holding, not into it. So this one's looking pretty rough at the moment. We'll have to see how it plays out over time.
Thanks for looking, sir. All right. And then looking at Micron came up and they are having a terrific day, up 7%. The 5-day, look at this. It's like, whoa, pretty treacherous kind of stock. Now, this stock's been flourishing, up 177%. It most definitely has. Their volumes have really increased, but their margins are different than what we deal with over on NVIDIA. These guys do what is storage, I forgot the term, but it's basically the accessible storage to a computer. And they're selling a lot of it because the data center is really rolling. So you see the revenue growth really expand. And this is annual. Let's see if we can look at the quarterly. So they are growing quite nicely, but the undesirable within Micron is when you look at their margins, 39.7, 22.2, it's kind of been a little rough. It's expanded because of their demand, but once demand kind of wanes, this one's going to be, dealing with some, very small margins, very little money left for them. It's not like NVIDIA making 75, 85% gross margins. It's a lower margin business because they have to compete against Samsung and another company. I forgot. I think it was Hymix is the other company they have to compete against. So this is a commodity-based microprocessor, and just not my favorite semiconductor company, but that's what I think. The market thinks otherwise. It's buying the stock up. It's doing really well. So congratulations to Micron Technology stockholders. Any comments on Micron?
Yeah, so it has been on a nice run. It's trading above its upward sloping 20, 50, and 200-day moving averages. RSI is positive, currently at 67. PPO has been fairly steady, but in bullish territory. And accumulation peaked out on the 28th of October and has decreased just slightly. If I was a holder of this, one thing that I would be watching very closely as it trades is this bearish negative divergence. So you have, let me make that a solid line. So I'll save this. So whenever, what's happening here is you're reaching higher highs. Let me save this. So you're reaching a higher high. The RSI peaked. You consolidated, went up to another peak, but the momentum was not at the same level as it was before. And then we consolidated, we went up to another peak, and the momentum was even less. This time it's actually a little higher, so we peaked out 3 days ago, and the RSI was higher than the prior peak on the 29th of October. So that's somewhat positive news, but I would keep an eye on this bearish divergence that we have going on with prices. But I mean, the chart looks pretty good overall to me.
Okay. Very good. All right. So let's get into the last four that I wanted to cover. And these are stocks that that announced earnings yesterday, and it had a lot of movement. AMD, and this stock over the last 5 days is down 3%. This has been a very good stock. Now, the news that made the stock go super high was their partnership with OpenAI, where they're going to give 10% of the company in order for AI to buy their semiconductors and build out a data center with them, which is an interesting deal. The stock did go up to a $405 billion market cap. It had a tough day. I thought it was going to have a tough day yesterday. It announced yesterday after the market closed. So it looks like it's back to even. So it really didn't see much of a drop, but it had been under pressure of some sort. AMD in my book is priced a little too high because their fundamentals, they don't drive enough cash flow and enough margin. But, again, investors saw through that. They invested, and good for them. If you're an AMD stockholder, you've done well. Congratulations. Wanted to cover this one just to see where the stock was trading a day after they announced, and any comments on AMD that you've got.
Yeah, so we looked at this one before, and we had 3 trend lines on here, and it broke above this bottom trend line and just kept going higher, and then broke out above this longer. Oops, I didn't mean for that to happen. This longer trend line. So these are always really positive things that happen when they're breaking out above trend lines. Now here it went up and touched that trend line, which was the start of the trend line. Actually came up and touched it again, fell back below it, but then they had a breakout. That's when that deal was announced, and they closed up above that and have been pretty much going up since then, with the exception of the last 2 days. But you do have a 20-day that's rising, a 50-day that's rising, a 200-day that's rising. Notice the difference in the RSI with this one compared to Micron. So here we got to a peak in price with an RSI of about 78. We got to another peak in price and the RSI is actually higher. So your momentum is getting better as the price goes up. We reached another peak and the momentum was even higher. So when I'm talking about bearish divergences, that's what I'm talking about. This one is bullish and it's converging with the prices. So every time you reach a new high, the momentum is actually higher. We reached another high. We actually broke out above that upper trend line, and look at the RSI. It is at a 1-year high. So that's the difference between those and why I talk about those trend lines. This is a really good example of one that's got powerful momentum, high after high after high. And Micron is not in that position. It's seeing lower momentum as it reaches new highs. PPO looks really great. We did have a bearish crossover in bullish territory. Accumulation is been higher in the year. We've had a lot of sellout of this particular holding, which is kind of interesting given these higher prices we're seeing. But anyway, AMD looks okay to me. I think we may struggle here for a while. We'll have to see what new announcement they have.
Thank you, sir. Arista Networks announced yesterday, and this stock's under pressure. This has been a stock that I've covered for 2 years and have shown that, hey, this thing is priced a little too high. This is a networking company, and they do have good growth, but they just can't substantiate their stock price. It's really been bid up, and you see that it's really gone really, really high. And I did some videos around here. It tanked. It looked like, investors were really paying attention to fundamentals, but then they bid up the stock again. It looks like, again, they're beginning to pay attention to fundamentals, and the stock's under pressure. It's an expensive stock, PE of 54. The growth rate was 20%. It's not like they're doubling their business, overnight. They're just growing at a very good clip. And if they become a slow grower, man, it's going to be a real painful experience for investors. So Arista Networks is under pressure. The forecast, analysts, 15 of them think it's discounted at this point, and that's a pretty fair discount. I think it's overpriced by more than 30%. And these guys are going to grow at a clip of 20%, 19 and 20. And their PE ratio, you have to pay up for the company, even though the growth rate is good, but it's not great. It's just good. They're not the biggest networking company. That would be Cisco. So they are still, they're good size, but they're not big. And their profits are going to expand about the same amount as their top line revenue growth, which is a bad sign, meaning that they just don't have a lot of pricing power. So overall, this has been a sell for me for the last year and a half, and it's really under pressure. What are you seeing for Arista Networks?
Okay, let me save this chart here. So it's good to see examples of what I'm talking about with the RSI one after another, but here we had higher prices, lower momentum, and finally paid the price for it right here. So we're now trading below a downward sloping 20. We still have an upward sloping 50. Based on the wicks on this candle, you got a lot above and a lot of below the open and current price. So there's a lot of indecision today. The PPO also has a bearish negative divergence. So not only the RSI, but the PPO is also in negative convergence. We're still sitting at pretty high accumulation for the year, but the money flow is what I call in no man's land. It's not bearish and it's not bullish at the moment. So keep an eye on these divergences because we actually are starting to see a breakdown in price at the moment. Your next support level is probably around 130 or so, which is at this peak here from the 24th of January. And I also see a big gap in prices right here, which is probably when they announced last time. So a lot of times these gaps will get filled. So that gives us two places where we have supported around 123 to 130.
Excellent. Thank you. So Palantir has seen their stock sell off a little more than 10% over the last 2 days. It announced earnings and the stock was under pressure. Yesterday went down 8% and it's down again over 2%. And it's a terrific business, growing its top line revenue really well, great margins, but it's just really expensive. A PE ratio of 415. That is really, really high. Forward P of 209. So there is such thing as a stock just being too expensive. And this is, in my opinion, an example of it. It's a terrific business, but it's just way too expensive. Michael Burry has jumped in and shorted the stock, and the CEO of Palantir decided to take the gloves off and said that Michael Burry was kind of crazy for doing that. But we'll see who's right on it. Michael Burry at this point is making a point, and he doesn't have to stay in the stock for it to go to zero. He could make a lot of money because he put almost $1 billion on the table shorting Palantir. So if he saw that the stock price comes down 20-30%, then he closes a short position, he made 20-30% on $1 billion in like a month, which would be a phenomenal rate of appreciation return for his investors. So Michael Burry might be coming in like a Jedi Knight and just doing something that is going to happen very quickly, which is the stock price is going to pull back. maybe it has a longer term effect, but this market's really roaring higher again today. So that's probably helping Palantir. So we'll see how this thing settles down. Now, Palantir is a tough one. Do you have any charts on Palantir?
We can revisit what we looked at before. So this it put in a cup with handle pattern. And back when it completed that pattern, I calculated a price target of 207. Do you see where it traded 2 days ago, 3 days ago? 207. So these patterns do work. Keep an eye out for them. I've got several of these that have worked out almost to the dollar. So if you can catch those back here, then you can run, 15% on a stock as long as you don't hold it too long. The Palantir is closing, trading right now below a flattening 21-day EMA, an upward sloping 50 and an upward sloping 200. Down to the 50 from where it's currently trading would be another 5%. Down to the 200 would be about 30%. I don't know how it doesn't test its 200-day very often. We tested it in 2024 a couple of times and in 2023, but it doesn't test that very often.
Thank you, sir. So the last stock we're going to cover on the stream is going to be Uber. Uber announced yesterday, and then they announced before the market opened, if I recall correctly, and the stock sold off. Now this one here, I scratched my head because the earnings report looked good. I'm like, what did the market not like? I know that the profitability was a little bit lower than what investors wanted. Uber is trying to launch some new businesses. Probably the biggest one is the robotaxi business, and maybe that's what was the source of concern. Waymo is really doing well in robotaxi. That's Google's solution, right, or service. Waymo's opening city after city after city. Pretty soon, Waymo's going to be like everywhere, and there's going to be all these self-driving cars, autonomous cars everywhere. And of course, Tesla is promising again. That's the promise machine over there. That they're going to come out with their robotaxi, and there's going to be other players as well. So maybe that's a source of concern with Uber. But I'm a big stockholder of Uber. That's not a concern for me. They continue to grow their top line revenue. I try to match stories with facts, and the facts just don't add up here. The business keeps growing. It's a big business, $13.4 billion of revenue just in that quarter, 20% growth rate. So to me, I'm like, no, they continue to grow. They're growing the number of riders they have. They're growing internationally. They're going to invest in their robo-taxi service. I think consumers are very comfortable with the whole Uber brand and experience. There's a lot of people that are not going to want to get in a self-driving car, by the way. I'm willing to do it. I think it'd be fun. But I think a lot of people are not comfortable having a robot drive them around, especially I was, where was I? I was driving through Los Angeles. I was leaving a ball game. We went to see who did we see? We saw somebody play, or we saw a concert. And I got on the freeway, the highway, and a Waymo got on the highway. I'm like, wait, these things go on the highway now? And the thing was flying at 65 miles an hour. I'm like, whoa, pretty interesting. Here we go. The future is here. So Uber, sold off. I bought shares yesterday. It sold off quite roughly, right? And then it bounced back a little bit. So my shares that I bought down here were worth a little bit more. And it looks like today the stock is under some pressure again, but we'll see what happens. I think Uber is going to be fine. They're going to be a big player in the future. They're delivery business looks good. So I listened to the Uber call. I read their earnings announcement, and I scratched my head. The market just is treating the robo-taxi story, I imagine, as, hey, that's a major threat to Uber. So what do you think about Uber? What are the charts telling you?
Yeah, so I like Uber as well, but they've been struggling to break out above 100 or so. They've tried it 3 or 4 times over the last 3 months and keep getting rebuffed. The 5-day moving averages, 5-day moving average has rolled over, turning lower. Looks like the 50-day is still moving upward. The 21-day EMA has rolled over as well. In the last 2 days, it's trading below that. That's usually not necessarily a good sign for the short term. You'd really like to see if when it's in an uptrend to stay above that 21-day EMA. So I don't know what it's going to do here in the next few days, but I would really like to see it hold that, which it's not at the moment. One of the things on the RSI that I like really well is, we've looked at other charts where it gets really oversold, like it drops below 30, which is really oversold. I like to watch stocks that can stay when they are on a downtrend, they stay above about 40. And that's where this first red line is. This one's at 40. This one's at 60. Overbought is 70. Oversold is 30. So when it does pull back, if it can hit and hold that 40-day moving, not a moving average, just that 40 RSI, that is a really good time to buy if it can hold that. And then what we see here, let me turn off my cursor so they're not in the way here. So look at this peak right here in the RSI. It didn't quite get to 60, but it did rise above the previous high after a support at 40. Then we rose up, we came down, we didn't hit 40, and we also still haven't got to this peak RSI yet. But it would be nice to see Uber, since it is holding this RSI 40 line, to watch it break above this peak. And hopefully that would send it above the $100 price where it's been struggling. But anyway, I'm keeping my eye on this one because I like this setup where it doesn't drop into extreme oversold conditions, that it gets down to a certain level and people start coming in to buy. So the PPO did move into positive territory about 3 or 4 days ago, but it is since coming back down into the bearish side of the PPO. The accumulation is moving higher. We did have some distribution or money flows that was moving out, but looks like they're starting to come back in. It's sitting somewhat, right around zero, so it's kind of in no man's land at the moment. But the accumulation, let me turn my cursors back on and come down here to the accumulation. So you can see we're just about at a not quite peak. We peaked out somewhere around the 19th, but we're there, almost there. So we got good accumulation. PPO struggling at the moment. The RSI looks really good and has really since I would say the 8th of April. So right after the tariff announcements and the April low, the RSI has held up really good for Uber. So I'm a shareholder. This, like you said, Victor, this would be a good time to probably start adding. I don't see a big pullback. Just keep an eye on that 21-day EMA and see if it can't get back above that.
All right, sir, we've got one last request, and I'll give you a minute to get set up. DraftKings, DKNG, the charts. Can you please show the charts? Because they're going to announce tomorrow. I'll give you a minute to get that set up. Let me just cover the market, and then we're going to come back to DraftKings. Looks like the market doesn't care that there was a sell-off yesterday, and stocks are moving higher. Broadcom higher, Micron higher, Nvidia higher, Google, that is nice to see, 2.38%. Meta back, okay, and Eli Lilly is up substantially. So we're going to shake off yesterday and try to make up some of that money we lost yesterday. Now, personally, I had a pretty good hit yesterday. No big deal. I'm having a great year. But these two stocks here, these are my two biggest holdings. So I'm good. I'm good with these guys going up like this. That's a pretty good day. That's going to help me come back and get back closer to the green for the month of November. Now let's go back to DraftKings. What are you seeing with this gambling website?
Looks like a gamble.
All
So
right.
it has been on a downtrend since the 28th of August. We're moving into earnings, and we've had one. No, that looks like actually an up day. 1, 2, 3, 4, 5, 6, 7, 8. One up day out of the last 8, and 8 down days out of the last 9 days. So this one's showing a lot of weakness going into earnings. That's usually not a good sign. Let me see. So let me go back at least one more year here. Okay. So it hasn't really been at this level we're looking at right now since November of 2023. The RSI is very oversold at the moment. The PPO is in bearish territory, and we had a bearish crossover in bearish territory on the 28th of August, and it is getting more bearish. The accumulation has really started falling off on the 29th, and we're not quite at a 52-week low, but we're making our way there. Got a lot of money flowing out of this particular holding. It has gotten back into what I call no man's land, so it's not either bullish nor bearish at the moment, but it's been bearish since the 30th of September and is somewhat neutralized at the moment. So this one's not looking good to me going into the earnings. It looks like it's showing a lot of weakness and people are getting out before the earnings.
Yeah, and the story that I think is really hurting the stock is that these prediction market platforms like Kalshi and Polymarket, more Kalshi because they're fully legal in all states in the United States. They are taking bets on, sporting events, even outcomes like we just had this election yesterday. So you could have bet on elections. And I think that platform of betting or gambling or making predictions is going to carve away a part of the addressable market that DraftKings, if you would have probably saw their business plan 10 years ago, they looked at an addressable market. Well, that addressable market's under threat from Kalshi, Polymarket. And if you're not familiar with Kalshi, it's a different experience than, and I'm not going to show it. You could take a look at it on your own, but I think that's the story that's really keeping DraftKings back. And I think DraftKings acquired a small prediction market play. They announced it like 2 weeks ago, maybe a week and a half ago. So they see that as a major threat. And it's actually legally the Kalshi Polymarket model is superior from a legal perspective because they're using the same methods that we invest in options. When you buy an option on a stock, you're basically buying a contract saying For example, Michael Burry bought a contract and said, I would like to find somebody that would buy shares from me at a given price. And if that stock goes down, he's going to force somebody to buy his shares at a higher price. And therefore, that's a contract. Well, Polymarket and Kalshi are using that same format of selling contracts on a sporting event, which is, hey, I don't know what games are going to happen this weekend, but let's go back to the World Series. Game 7. Some people said the Dodgers are going to win. Some people said the Blue Jays. Well, they were able to buy a contract and there'd be a participant on each side. They're using the same legal format, which states have tried to block, and they did so unsuccessfully, because if they blocked Polymarket Kalshi, they're going to have to block the options trading, which is not going to happen. That's been around for a long time, but it's really the same format, and I would say that, like, back to Palantir, if somebody's taking a gamble on, hey, is Palantir going to go up or down? It's the same gamble you're taking on a baseball game, in my opinion. But that is what's going on with DraftKings, and good to cover it. All right, sir. Nice job today, Daryl. We covered 16 stocks. We were open for business on this Wednesday, and so is the market. The market is open for business, selling lots of Broadcom stock, NVIDIA stock, Google stock, Meta stock. It is selling some shares in Palantir, Bank of America. They're having a bad day. Home Depot. Wait a second. I bought stuff at Home Depot last week. I guess it didn't make a difference. And I don't know who that is. Maybe Home Depot, Lowe's. So it's going to be a good day. It's going to be a good day on Wall Street. You shook off yesterday's news. Man, it's getting pretty ridiculous. This stock market doesn't know how to go down. It probably needs to learn how to go down, because it's not doing a good job of selling off for a week or two or maybe a month and giving us better pricing. So for now, let's just enjoy the gains in our portfolios and watch our portfolio recover from yesterday. I know I need to recover some of the down action. And one last thing, crypto, Bitcoin is back, baby. $103,638 per coin. So that looks good. So we'll see how this market trades for the rest of the day. We don't have any humongous earnings coming up. We'll see if this government can get out of the shutdown mode. I'm optimistic they're probably going to handle that this week, because it's beginning to really get some bad press for all those involved. So I'm hopeful that they get that sorted out. We don't have a disruption in travel. I do have some family that's traveling for Thanksgiving, and that's what I'm thinking about, is I don't want them, to be disrupted, and they're going to do cross-country travel. So I don't want that to be a problem for them. All right, everybody. That is the stream for Wednesday, November 5th. Once again, Daryl, great job today. Thank you, sir.
Thank you, Victor.
I hope you have a terrific day, and everybody out there, you guys have a great day. We'll see you on the next live stream. We're going to live stream on Friday, same format, and we will hopefully see you all on Friday, same time, same length, same format. You guys have a terrific day.
Take care.